Good morning, traders. Good afternoon for those who are not in my time zone. It's 8:02 a.m. Chicago time on Tuesday, the 12th of December, 2017. We're getting very, very close to the holiday period. Thanks for joining me this morning on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is we have news out of Saudi Arabia. They're saying that they're planning to hike gas prices by 80%. 80%. They're looking to raise the gas and jet fuel prices by 80% in January. So RBOB is leading the pack. RBOB gasoline trading January 2018 up 0.0174, 1%. So fill up at the pump today. Followed by crude oil. Crude oil is up 0.6%. The laggard this morning is the euro and Bitcoin futures. Bitcoin futures are down $55 so far. As you can see on your screen, bottom left, the bottom pane is the cash coming out of GDAX. And then the one above it that is probably hard to see is the heat map for the futures, currently trading 18,480 versus 17,300. Very big spread. Yesterday the spread got up to $2,000 on this product. So that's where we stand. As far as the indices are concerned, they're slightly higher this morning. We're seeing pretty much unchanged except for the Dow. The Dow's up 68 points or 0.28%. That's the major news. For Europe, the biggest news this morning is inflation is at a 6-year high. Consumer prices rose to 3.1% in November. This is the highest rise since March of 2012. That'll make the Bank of England announcement, the next Bank of England announcement, very important. Looking for hikes potentially, just to see. We want to see what that bank does and if there's any knock-on effects to other currencies. As they raise interest rates, the value of the British pound is likely to go higher as money seeks better returns, and then the value of others may go lower. So, you know, our economies have been in a currency competition for years, and that's just part of it. Everybody tries to make their product cheaper and so on. So with that, let's take a look at what we expected yesterday. Actually, what we're looking for today, we just got PPI core, PPI final demand just about a half hour ago for November. Came in at 0.4 versus 0.3. As far as what we're looking for the rest of the day, we're looking at the U.S. monthly budget statement for November, negative $135 billion. Wow. That comes out at 2 o'clock. That's what's expected. As far as speakers, we just get Draghi at 2 o'clock as well, 2 o'clock Eastern. If you're watching the Euro or European products, that's what you want to look at. What did we expect yesterday? Here we go. This is the primary plan for yesterday. Let me switch a color. You're going to hear noises in the background. I've got construction going on here, so if it gets loud, it's nothing I can help right now. So yesterday, the idea was we're opening in an open auction out of range. We're opening outside of the prior day's range, Friday's range, and then we're looking for a dip, and then we're looking for the market to rally up to 26.63 or so. Potentially pushing 26.65, and so that's pretty much what we got. The secondary scenario is a quick push up. We were geared with the overnight session. We were geared for the market pushing up right away, and if it does, it's likely to fizzle out in the 63 area or so and drop. As I said yesterday, I'm expecting about 7 to 8 points of range. So looking for 55 to 63 or thereabouts. So that's the primary expectation. Here's what actually happened. Oops. So here's what actually happened. Market opens up, tests up, tests down, open auction, pushes to 62.50, just below 63, and then consolidates before it rallies into the close to 26.65. That's basically the primary scenario playing out right there. As far as what we did overnight, here's what we've done overnight. Very high kurtosis. Remember, it's expiration week, so the volume is going to be higher than usual. The volume on the S&P so far has been 272,679. So volume is pretty high, but we can't forget that we are in rollover. It's expiration Friday, this Friday, quad witching, and so the volume is going to be very high for that. Okay, so that's where we stand in the overnight. High kurtosis, very tight range, 63, 50 to 68, just 4.5 points. And that's relatively tight. It's well within the statistical first standard deviation, or what we would consider normal, on the low side, and the market's been holding steady above the prior day's close. Inventory is about 70% or so long, and then the delta down here is pretty much flat. The fight is not won by either side. It's just basically holding steady sideways. So from the overnight, all we get is we see that there's a whole lot of volume and not much price discovery. That takes us into what we're expecting for today. Now, just a quick step back here. What have we accomplished? Okay, so we constantly, very key questions. Again, those of you who have been around a while, following a while, you've heard me say this about 1 billion times. We constantly have to look at what the market is doing. What is it trying to do? How good of a job is it doing in getting there? So if it keeps trying to rally, how good of a job is it doing in rallying? And that gives us an idea of what the context is, where the strength is. And given the context, combined with the strength defined by those three questions, we can answer the question, what is it likely to do next? Likely implies probability, which means that we don't know. We can never know. But then we execute the trade, and we're either in a winner or a loser, and that's all there is. That's not part of the equation that we control. We cannot control whether we're in a winner or loser. All we can do is stack the probabilities. With that being said, we're looking at the weekly, and again, we continue one time framing up so far, okay? And there's strength on the daily. The daily turned, as I talked about last Wednesday. So we have low. The daily was negative, was one time framing down. It held steady on Wednesday, and I warned that this is likely to turn, and we're looking higher. And we're about 30 points higher. Nothing huge. But the daily continues to one time frame up. The weekly is one time framing up. So the resistance against your trade is likely to come in for if you're short as of right now. Notice that yesterday we closed right at the peak of the trade. This is an interrupted auction, and it's likely again to continue higher. So pay attention to the weekly, what the bigger time frame is doing. We finished on strength. We expect the market to extend higher based on that information, and it did. And so that brings us into today. And today, Again, we're opening up in a gap out of range. We're likely to get an open auction that tests down, consolidates. The test down can dip as far as 63 or thereabouts, 62.50, 63. And then I'm expecting it to turn, push to new all-time highs. Our key target is 71. 63 to 71 is about 8 points. And that's the range for the day. That's the primary scenario. Just a continuation of what we have. It's Tuesday. Probabilities are on the side of range expansion, but it's very quiet. Tomorrow is Fed Day, so not expecting too much. We have Fed Day tomorrow, then expiration Friday, so there's going to be a lot of maneuvering in the market today through Thursday. So pay attention to that. On the secondary, as you'd expect, open auction, pop up, push, consolidate, push, make a new high, lower high, turn around and start exploring lower, finish somewhere in the gap into tomorrow's session by the end of the day. Those of you who have been listening a while, you probably are recognizing that it's just repetitive. Oops, sorry about that. The whole thing is very repetitive. What I'm talking about is constantly repeating, and so it's the same auction, it's the same process. As long as there's liquidity, then no problem. And this is where it's important to recognize when there is or isn't liquidity. So if we look at how, for example, Bitcoin is trading, there is not enough liquidity. There's very little in terms of price liquidity here in the futures. So let me squish this a little bit. And because of that, we're not getting a proper auction. So I'm not seeing an edge in this product still. The auction is very jarred, very chopped up. You could see the bid offer is very chopped up. You could see the heat map has a lot of dark zones in it, meaning they were never offered or bid. And for that, we can't really do much in terms of an auction, and it's not ready. So with a product like the ES, though, we do have the liquidity, we have the participation, and therefore the process is always going to be the same. It's continuously going to be the same. So that's a point that I wanted to make. It's really important to recognize that nothing has changed in the last, what is it, 8 years that I've come online from my cave as a prop trader or a prop shop operator. Came online and started sharing what I'm looking at and what I'm doing, and it has not changed. There have been improvements, technology and so forth, but overall it has not changed. It's steady because the basis of it is context. Again, I want to remind you, figure out what you need to do today to win the day. You got to win the day every day. We cannot make money every day. I've been doing this a long time, and I don't make money every day. I lose some days. Some days I just waste my time. It feels like I'm wasting my time. And so what you can do, though, to make your time worthwhile is to win the day every day. So figure out what it is you need to do today in order to move yourself forward, move your chip forward, move your piece on the board a little bit forward. Doesn't mean we don't measure performance in terms of P&L on a daily basis. If you do that, you're going to drive yourself nuts. Okay? So measure your progress in terms of how you executed in the market, and that's how you win the day. Determine what your errors. I've done several talks on Futures.io and others about eliminating errors. So if you're able to identify your errors could be FOMO execution. You just got in without a plan because you didn't want to miss the big move. Errors could be you clicked on something you shouldn't have clicked on. You wanted to get short, you got long. Errors could be you had a trade on, then you micromanaged it and closed it before the plan said you should close it. In other words, you're stopped because somebody you're listening to or follow or a friend or whatever is taking an opposing position. That's an error. Identify what those errors are. I can rattle out about 8 errors that traders consistently make. Your goal is to hammer on those and get rid of them. If you get rid of the errors in your statistics, and I'm talking hardcore live metrics, 9 times out of 10 in my experience, I've seen a massive improvement in the person's statistics. So if they don't transgress their stop, and you make it so that the losing trades stop out at the stop, without factoring in the fact that if they had been stopped out, they could have caught a winning trade next. But let's say they held on and held that trade for much longer than the stop said they should. If I eliminate the extra losses from that one terrible trade, you'll find that their expectancy reaches 0 or becomes positive because of these errors. So identify your errors. It's really, really, really important. Do not rely on your gut. Rely on what you see on your screen. So if you're making a determination that you're going to get long or short because of a 15-minute chart, then you switch to your trigger chart. Okay, you pull up your dome, you put the trade on, and then what do you do? What do you do right after? You don't stare at the dome, because that's not your decision-making process. What you do is you put the dome away with your stop built in, at least a disaster stop. You put your dome away, you put your trigger chart away, you focus on that 15-minute chart, because that's the context that you came from. So if you do that and focus your attention on a chart from which you're triggering, from which you're building context and triggering, not triggering, but coming up with a trade, you'll notice that you can relax into the trade and let those trades just work themselves out, as opposed to staring at the dome and seeing that you're long and there's a huge offer and nobody's lifting the offer, blah, 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 blah. You're getting caught up in the tick drama. Good luck, and I'll catch you tomorrow morning. Take care.